So, popular advice is not always good, and good advice is not always popular. Some of the best advice anyone could ever give you is to think about stock market returns over the long term. Ignore all the short term noise of AI bubbles and this company's earnings and Iran wars, and just put your nose down, put money away, and think about the long term. July was very volatile. The market was all over the place. There was a hedge fund situational awareness that got cooked because they over leveraged into tech. There's Iran wars. It was the Strait of Hormuz was closed. It was open again. It's closed. It's open again. And we're leading into a midterm election. There's a bunch of short-term triggers and volatility, but the truth of the matter is none of that matters. None of it is important. If you are investing for the long term, it's just noise. It doesn't make for a good news cycle to tell people to put their nose down and just quietly dollar cost average into index funds and wait. But it's probably some of the best advice that you could ever get. And I know what you're probably thinking. Isn't the market at an all-time high right now? And you're absolutely right. The S&P 500 is trading near an all-time high, and the Nasdaq 100 is starting to trend back towards its all-time high. But if you look from 1950 to now, there's been about 1,320 all-time highs. So you average that out, that's about 17 to 18 all-time highs every single year. All-time highs are completely normal. And in fact, if you do the research, you'll see that there's no real statistical difference in investing at an all-time high to investing at any other time in the market. You're not going to be able to time the market. It's nearly impossible. Just keep buying and keep your nose down. And that midterm trigger, the midterm elections. So if you look at the historical average 6 month returns after a midterm election, it's around 14%. So regardless of who wins the midterm elections, it is a very bullish event for the market. Once the market has certainty about what's happening with the governance structure of the country, it responds positively. It doesn't matter who wins, what the result is, the certainty is enough. On average, we get about 14% from the S&P 500 in the following 6 months. And the other thing that I hear all the time is, aren't all these companies super expensive? And the truth of the matter is, they are only trading at a slight premium to what the historical averages are. So if you look at the 12-month forward price to earnings ratios of the S&P 500, it's about 20. The 10-year average is 19. That is not a huge premium for the growth that we're seeing from these companies, because their revenue growth is well above historical averages, and their profit margins are substantially above historical averages, and they're continuing to expand. The setup in the current stock market is very, very bullish, especially if your time horizon is 5, 10, 20 years out. Put money into the market. It is the best time to accumulate wealth in probably your entire lifetime. Right now is a phenomenal time to do the boring thing and dollar cost average into the market. Like I said, good advice is not always popular, and the popular advice is not always good. I don't have a hot stock tip for you. I don't have some sort of buzzy product for you to buy into. Just do the boring thing and make a lot of money. And if today's video gave you a better idea of how you should be thinking about the current market environment and where you should be investing your money, like the video, subscribe to the channel, and share it with somebody else who is caught up in the current headlines of the day. Keep getting 1% better every day, and I'll catch you in the next video.
Stay in the market, keep your vision on the prize, building up the wealth right in front of your eyes. Talk Higgins, yeah, we keep it moving. Talk Higgins, watch the wealth improving. Markets and the money, making sense of the math, helping you navigate the financial path. Talk Higgins, subscribe for the vision. Stay smart, stay invested. We out.